Welcome everyone, and we're here for another episode of the Property Nerds podcast, and it's that time of year, 24th of December, Christmas around the corner, literally tomorrow. Jackie, what's on for Christmas plans for you, mate?
Mate, it's been a pretty big year, so I haven't had a break at all. So I'm due for a 2-week just sitting on the couch, doing nothing, just recharging. And then, yeah, because I'll be straight back into it in January, I bet.
Mate, you've got a few little ones. I don't think doing nothing's that easy, right?
Yeah, well, just being present with them, not having to always jump and think about work and have all these things going in my mind. I think the 2-week break is just spend time with family and just recharge.
Yeah, man, it's going to be good. It's going to be good. Are you guys fully into Christmas? Because I know Lauren's Lebanese, right?
Yeah.
And so you're an Aussie background. Do you guys go hard on Christmas? What's the spirit like at home?
Yeah, well, we're going to host Christmas this year. Because most of my family have kind of, gone into retirement, or the younger ones don't really have a house that they could host. So we're pretty much the only ones that can host now. So we're going all out. We're going to have the Christmas cricket tradition going. So yeah, the one day a year we actually play cricket or watch cricket is Christmas.
Bowler, batter. What are you doing?
Oh, we all have a go, mate. It's just a bit of fun, bit of banter. But yeah, we'll be going hard on Christmas.
Mate, when's it not cricket in the Indian household for me, man? It's all year round for me. But no, it's good. It's good. And in terms of the year, like obviously we're closing off the year with this episode as well. What's been some big highlights for you? I know we haven't been here together on this show for the whole year, but since this year, what's been the big highlights?
Mate, I was literally just talking to my wife about this, and because coming around to December, we just think back and go, wow, like this year. We always say this too. Like we always think back. Ever since we really got into finance, we were kind of just like, wow, what a year it's been. This year especially is because just over a year ago now, we started 4Acre Financial. And that, when we started that, it wasn't planned. It was kind of out of the blue, and we just didn't know what was going to happen. We didn't know what the next month was going to look like, what the next 3 months was going to look like. And, we just worked so hard for each other, and to look back at the year we've had, very grateful, man.
This was a year of grind for you, for sure.
Yeah.
Sure.
No holidays, no days off. Just, I think I was doing weekend, Saturday, Sunday appointments all the way up until like last month. Like it was just insane. We had to, but yeah, to look back and reflect on it, I'm very grateful.
Mate, that's a business owner's dream in paradise though. Like you're in a situation of you do what you love and it's your first year. And to be blessed with that level of, support from your customers, people having that advocacy for what you do. You're obviously making a massive impact for people, and then you to be full like that from the start of the year to now, it's phenomenal. So, mate, hats off to you guys. Well, mate, today we've got the not oversupply. That's not the best way to look at a white paper. Undersupplied regions. Imagine if someone's going, here's the oversupply. You know what? That'd be a good idea. Going into oversupplied markets so people know a bit of what to stay away from. But hey, today we've got the undersupplied white paper in terms of the big Australian housing crunch. And this is research we've released here at InvestorKit, which reminds me, if you're tuning in for the first time and this podcast is new to you, my name's Arjun. I'm the CEO at InvestorKit Buyers Agency. We're Australia's Buyers Agency of the Year for 2024 and 2023. First to do it in history, back to back. And we're actually trying to do it for the third time in a row with the awards in February. So that's around the corner. So fingers crossed. But we're here from an investment side in terms of buying properties to scale a portfolio. And then Jackie from 4Acre Financial here when it comes to just really getting the best position of your finance so that way you are set for scale. And I think that's one thing not many people talk about. People talk about getting the best rate or getting the best service. Those should be a given, right? But that aside, what's more important is actually scaling a portfolio, and that's where 4Acre Financial's in the house. So we're both here from the property nerds and sharing what we love sharing, which is the data, the insights, the tips, the strategies on all things finance and property. And so we've got that going on today in the research paper here for Australia's 25 most undersupplied markets and their supply shortage score. So keen as to jump into this one, Jack. You've had a read. What are your first initial thoughts?
Well, I understand that. I mean, if you ask the layman and you ask them to see basically on the current market, how do you identify a shortage of supply? I think most people would kind of understand that on a base level. But in this report, you also look at the long-term shortages. But how do you really look at the long-term shortages? Like, because obviously you're looking at the current market conditions and all that, but to really look at it from a long-term aspect, and especially when you're investing in property, most people are thinking of that 20, 30-year outcome. So how do you,
Yeah, it's a good question. So firstly, for anyone following along with today's episode, this research paper, if you want to follow along with us or hit pause after I've shared this info with you, grab a copy and then come back to it so you can see what we're seeing. It's investorkit.com.au. Click on the property research button and they'll take you through the latest white papers. And that's where you can find Australia's Housing Supply Crunch, FY24/25, totally free resource to download. So go check it out, whether it's during this episode and you're tuning in or you want to grab it afterwards and have a good look at it, please do. But Jack, coming back to your point of undersupply. So firstly, we've created a methodology around what we call a supply shortage score, or internally we call it the SSS. And you know, with that, it's got a few core areas that we measure. So the first is future supply. And this is looking at building approvals in the pipeline and then using that as a percentage of current stock. So for example, if you had 100 properties in an area or a suburb, and then you had 3 properties in approval stage that are, you know, in the last 15 months, then that's 3% of incoming supply because that's 3 of the 100 houses, right? Now, very rarely will an area we look at only have 100 houses, so make that number much bigger, but that's the example of future supply. And future supply doesn't happen overnight. It takes years to come in, but in isolation, that's probably the biggest learning. No indicator in Australian property data, in my opinion, is like very valuable in isolation, because we've seen many instances where future supply might be high percentages and then it still grows, even for the next few years. And the reason why is because one thing many people forget is future supply doesn't all come out at once. It comes out in stages.
Yeah.
Also, it doesn't all come out at the same price. It could come out at different prices. Therefore, what might be today's price for something, if the future supply comes up at a few $100,000 higher, that's actually price growth, right? And then lastly, you don't look at future supply alone, because if future supply says 3%, 3 out of the 100 homes, what happens if there's 50 listings for sale?
Yeah.
So that's pretty bad of the 100. But what happens if there's only 2 listings for sale? Meaning you could have a huge 3, 5, 7, 10% building supply. But if there's nothing for sale, it's not much being added on. So it's all about looking at it relatively. But that's the first point. The second one we look at is established supply. So that's just the total listings in the area. And with that, we're looking at it in a few different ways. So we're looking at it static, like what it is now. We're looking at it as a proportion of the area. We're also looking at it from last 1 year, 3 year, 5 years, so we can see short to long-term trends. And then we're looking at percentage change. So it's like, hey, did it decrease 10% or 50%? And then we move over to price pressure. So price pressure is an interesting one. This is about how much heat's in an area. So yes, supply is the main focus, but supply can also be relatively low if there's just way more demand, even if there is high supply. So there could be lots of listings, but if way more people are purchasing, that's actually forcing it to be considered low net supply. And so price pressure is like how much demand is there for sales volumes, how much discounting is occurring, how fast stuff is selling. So we've got these 6 indicators. That's about 3 of them. If I go through the remaining 3, rental pressure, because you can't look at supply alone from a housing for sale. Like you have to look at supply from housing for sale, housing construction, and housing for rent. So you've got this holistic view, because what if there's a renter's market and all of a sudden you're saying, wow, there's no supply for properties for sale, but there's lots for rent, then all of a sudden rents are going to rise there. So you can't just look at it from one angle. And then we've got housing availability. So this is more stock as a percentage, because listings are great. What if you've got 30 and it's declining from 30 to 20? But what if that's 30 out of 50 houses in the area? So that's about that percentage.
Yep.
And then the last one's people movement, right? You could have 10 new buildings, but 10 people coming in. But that now is equally absorbed it. But in another place, you could have 2 new buildings and no one coming in. Or you could have 2 new buildings and 6 people coming in, and there's that extra people movement. So we're looking at it from all 6 angles. So that's how we look at it. Now, when you said long-term before, it's not super long-term view. Probably these metrics are helpful from like a 0 to 3 years.
Yep.
And as you go further from 1 to 2 to 3 years, that confidence level starts to come down, just because people movement, established supply, housing availability, rental pressure, and price pressure, these 5 of the 6 can move really quickly.
Yep.
Whereas future supply can't move quickly, takes time to build, register, and approve. So yeah.
So how much do you look at, like, I think people movement would have some be relating to jobs in that area that are opportunities for people to move there and get work. But also, how do you look at long-term government spending in relation to fueling a housing market?
Yeah, so we like to look at those separately, right?
Yep.
I think this is more isolating supply. So this research paper is super, super supply focused, but you're right. All of the economy, all of that plays a key part if you're analyzing a housing market as a whole. People movement's a really interesting one. I want to go deep into this one. So with people movement, there's so many variations of people movement. So one type of people movement is people coming in from overseas, right? Overseas migration. The second type of people movement is people coming in from the same state within cities. I think they call it intrastate migration. And then there's interstate migration, which is from other states to other states, right? And then you've also got migration through household size, or not migration, people movement through household size. So this is when a household size splits. Could be a family of 4 with 2 grown kids and 2 kids move out. It could be a family of 4, husband, wife, and 2 kids, and husband, wife separate, and then the 2 kids separate too, and they're in different houses, right? And that creates a separate household. It could be a family with elderly parents now moving in with the family, and they're now reducing a household. So there's so many different ways. Then there's also students that might be room sharing, and students split and get their own place after they get some work. So people make the biggest mistake of looking at people movement in isolation, like how many people coming off the planes. It's not like that. There's so many areas. And this is where people got, fooled with the COVID impact, right? When COVID, the borders closed, everyone thought, okay, that's it. No migration. Australian housing's dead. That didn't happen. And one of the reasons, not the only one, but household size, as the millennials started going into family formation or moving out, starting to get their own places, moving out of homes, all of these things, that household size reduction, it created people movement. Even though it's the same people, they used more households. So that's an interesting thing on people movement alone.
Yeah. And I see if you scroll down a little bit, you actually did a similar white paper to this last year at the same time. And at that time, there was there was 27 total property markets that scored above 4.5 on that SSS score. And this year, it's down to 16. So why do you think that is?
Yeah, so a few things have gone on. So if I firstly look at that reduction, it's the clear start of the cycle having some divergence. And that's an interesting thing that's popping up. So over the last few years, we've seen all markets all over the place boom. Yes, at different levels. But over the last 2 years in particular, each year started to show new trends, meaning it's not a blanket approach of everything everywhere growing. Melbourne's come back, Sydney's calmed down. So different markets are moving. In the last year's report, we saw many undersupplied markets in Sydney that were on that list. They've come off.
Yeah.
And so what we're noticing is that divergence is occurring where it's not this few years of booming everywhere. We're starting to see some markets spread and the supply conditions normalize.
Yeah. So would you say that would be, because I think, you guys look at the data, but I just look at what I'm seeing and hearing. So would you say that it's a lot of established owners selling their properties? Like there's more established supply coming onto the market?
Yeah, so it's a really good point. Yes, that's pretty much it.
Yeah.
So the fastest and the biggest moving factor to all supply data is established supply. Like nothing moves that more. Nothing moves the supply conversation more. Like even if someone goes, we're going to build 1.2 million homes, like the government's coming out and saying, makes no difference in comparison to established supply. Yeah. And what we looked at to point out that change was the 5-year average. So Sydney and Melbourne are not like heavily below their 5-year average of listings, but say somewhere like Perth and Adelaide and regional Queensland, well below their 5-year level of listings, which means, it's definitely established supplies. Whether it's people cashing out, whether it's people feeling a pinch, whether it's people downsizing, whether it's investors going, I'm not liking the mortgage repayments here or the numbers here. I want to pull out of these larger investments with larger mortgages.
Yeah.
It's a mix of many reasons.
We have a lot of those conversations, and it's definitely that. Like people just, they're held on as long as they could. Rates are still the same as where they are. They can't refinance, or they just can't put up with it anymore. So a lot of people are downsizing or just selling off an investment or two just to relieve pressure and just kind of hit the reset button. yeah, so that makes a lot of sense.
Yeah, absolutely. So that's been one of the reasons. I think the main thing to point out is that in this overall national review, it's those Sydney, Melbourne markets and the surrounds that in that last 12 months release, between this release, they're the ones that cooled off. And so they're the ones that really show the pressure coming down and the supply releasing, and they didn't score as high. And that's why our scores dropped. In terms of one thing you might want to see here, the scores, there were a lot of areas though, in terms of where they were centered around these markets. So I'll give people a peek. So I'm going to share 5 regions right now. And these 5 regions are in order from the top 5 that were like the most undersupplied. And if you're looking for the rest of the 20, because there's 25 in this report, you can actually grab the report at investorkit.com.au. Just click on property research, latest white paper there. But here's 5 markets, Jack, you might find of interest. So the most undersupplied market was the region of Fremantle. So this isn't suburbs. This is called SA3 regions, which is like a cluster of multiple suburbs. And Fremantle and WA was the most. Then there's Bayswater, Bassendean, if I'm pronouncing that right, Perth folks, second most undersupplied. Joondalup, again, Perth, third most undersupplied. Mackay, fourth most undersupplied. And Gladstone, fifth most undersupplied. Those are the 5 most undersupplied when it comes to the nation in terms of using our SSS forecasting or SSS methodology. And you can see a lot of WA and regional Queensland. Those are the big 2 flavors for sure.
Yeah. And I think, what do you think about those areas like Gladstone and Mackay where people have held a property there for, 5, 10 years, they've seen nothing. And then all of a sudden they get these 1 or 2 years of growth and they're like, oh, I better get out. I see that a lot, eh? You must think of all these people that have held the property for so long, they get 1 or 2 years of growth and they go, you know what, I'm going to sell. Do you think that has an effect on the established supply as well, like those local owners?
Yeah, it's a good point. So I think this is a data point that's a bit hard to capture. And I'll tell you why. I mean, yes, it's easy to capture the sale volumes that are coming up and the listing levels picking up. But in these areas, especially the Mackay, Gladstone, and look, I'm going to give away a 6th one, right? Rockhampton. So that's the 6th on the list. So they're the 6 most undersupplied. So Mackay, Gladstone, and Rockhampton, they're the 3 regional Queensland. The first 3, Fremantle, Bayswater, Joondalup, were the WA ones. But with those 3 in Mackay, Gladstone, and Rockhampton, the things to point out there is that, yes, they went through a big period of weak performance. But when they bounce back, let's just assume a lot of people are cashing out after they go, oh my God, I finally recovered there. Yeah. Let's cash out. It doesn't impact the supply negatively because the demand's just that much stronger, right? These markets aren't chronically or heavily undersupplied just because of people not listing. They're heavily undersupplied because of the demand roaring, right? When that many people have gotten in to buy, that's been a big part. Combine that with the listing levels being low. So even if there's a blip of people cashing out, which no doubt's happening, a lot of the buying force that's coming in is just that much higher. It doesn't make a difference. And so that's one part, but I'd be surprised at how many people cash out, because once you start seeing those gains, it's a train you want to ride, and this is evident with data that we're seeing across the nation with what we call hold periods. So check this out. In 2008, the hold periods across Australia in the 6 capital cities that we looked at, which was Adelaide, Brisbane, Canberra, Melbourne, Perth, Sydney, the data here shows that the average was ranging from, give you Adelaide, was around 6 years. Sydney, where's Sydney at? We'll look at the highest. Melbourne was 8.5 years. So you've got a 6 to 8.5 years hold rate. Now, if we look at Adelaide, which was the bottom in 2008 at 6 years, has now gone to 8.5. So you can see that hold period.
Yep.
And where we look at Melbourne, which was about an 8.5, is now at about 11.5. So it's a lot of holding. So people have actually increased their hold periods, which is a big part of also why supply is having a crunch, because people used to hold it, over a decade ago at 6 to 8 years. Now they're holding it at 8.5 to 12 years. And I think a big part of that is taxes. You know what I mean? When people have to sell and then rebuy again, they have those taxes to look at higher price points. That's no fun.
Yeah. People don't really, and you do go into this a lot, and people don't really think about the stamp duty on the way back in, but it's definitely something to consider. Like stamp duty is a significant amount of money that goes, it's just a tax, like it's straight to them. So People are really, really worried about capital gains tax, though. That is the one thing that is the most significant, depending on how long you've held the property, how well it's done. And that seems to be the biggest deterrent for people to be able to exit out of a property. They don't think too much about going back in to pay stamp duty, but they definitely think about the capital gains tax on the way out.
Yeah, look, taxes all around, man. Like taxes, I mean, you see a lot across the socials, right? People going hard on the comments going, tax these bloody investors, you know, tax them, chuck on this tax, remove that gearing tax, remove this. Anytime you play around with the system and you just stuff people up, like they have to hold it for longer to regain the gains.
Yeah.
And that actually just kills supply a bit more. Like, sure, you have blips where people might go, I'm not having any of those taxes, like land taxes, and a few investors sell and things like that. But overall, more and more taxes, more and more impact, they make someone hold it longer because they need more time to make that money back. And check this out. You'll love this stat. Or you'll hate it, but you'll love realizing the problem, but you'll hate the stat. But 1986, the median house price in Australia, $98,500. 2024, at the time of review, which was through the Property Council of Australia and Domains Insights, 1,375 million. Now, stamp duty back then, $1,931, a whopping 1.96%. Today's stamp duty, $58,034, which is cool. If the dollars go, they go up, both sides. But it's the percentage of price, 4.22%. So it's more than double. Do you know what I mean? As a percentage, like, yeah, the world gets more expensive over time. So don't get me wrong. Being more expensive as a dollar, it is what it is. But to be more than double the percentage, that's an issue.
Yeah.
And when you see that actual, you know, property to earnings, the index growth is just way apart. And so taxes like that, stamp duty, they kill mobility. Imagine if stamp duty and CGT weren't a big focus or an issue.
Yeah, well, that's what you mentioned.
Everything flies.
In this white paper about that could be a potential cause of the established supply being so tight.
Correct.
So that pretty much is stamp duty and capital gains tax. Makes a whole lot of sense.
100%.
Right? Exit and entry costs, that's for the established market. So let's go into the brand new market supply, because that's talking about a lot of different things, which is more government regulation and the challenges in actually releasing more land and having developments approved. So that's
yeah, let's go into new supply, right? So firstly, to link the conversations between new and established supply, there's a couple things to look at. Established supply will ease the crisis.
Yes.
You just can't come out of a crisis with new, right? And I'll give you an example. There are 10.4 million dwellings in the country. Maybe it's closer to 11 million now, but it's over 10.4 million. And what do you think is going to move the dial the biggest? Someone building an extra 100,000 homes or someone listing 1 million properties? Yeah. Do you know what I mean?
See, but that helps with, wouldn't that help more with selling properties, like the actual price of the property? What about the rental market? How does that relate to the rental market?
Yeah, so from the rental market, you've got two drivers, right? One driver is going to be from a supply aspect, is how many investors are in the game.
Okay.
If investment activity continues to reduce, what ends up happening is that the buyer, so today's buyer, they win. A home buyer will get a place. Great. Nothing wrong with that at all. We should celebrate that. But then people forget about others and they only think of themselves. It's just natural, right? And people can pretend to be like, I'm for the people, but you typically think of yourself. And I'll give you this example. The renter today goes, less investors, I now bought my place. Yes. Are they the only renter forever? Or do more renters replace them as a renter?
Yeah.
Kids grow up and they leave home. People get divorced and they leave home. People move out from, living with relatives or parents. People move from overseas to Australia. People move between states.
Yep.
People finish studying and they go to start renting. There's more people constantly fed into the rental pool. Now that pool's smaller because you've seen 30% of investors come down to 25, come down to 20. So every time that pool is smaller, there's more people competing for less stock. So that's one reason why established stock requires investors to be a part of the game because the government's proportion of public housing just isn't there.
Yeah.
So that's one element. The second element is the new build. right? When the new build comes up to an investor, or another world, which is called build to rent. So it's like institutional, big dog, big player money, super funds, overseas funds coming in and going, let's build a monster unit block or unit towers, but let's all build it all for investing. Like just everything straight rental properties in the areas people want to work, commute to, live, family, parks, all that sort of stuff. Those are the two biggest ways to move that, right? The third one is also household size. If everyone like comes together and household size increases, that means also people sharing more homes together, people coming together, living with family again, people not moving out as quick. Let's just say all these things happen. That also creates more availability in the rental stock. So those are things on the rental parts. But coming to your question on new builds as well, number one, rising construction costs and labor shortages. So we touch on that in this report. Costs have come down heaps. So like they haven't come down, but they're rising way slower, right? So they're rising really quickly, but they're rising much slower now. So that's a good news part. But labor costs have not. Like labor shortage is still a big issue.
Why do you think that is? Do you think the kids of these days are just, they don't want to do an apprenticeship, they can just make more money on TikTok, or what's the go?
Man, I mean, look, side note, you know, like ABNs in Australia have been booming. Like registrations for ABNs. So side note, this side hustle's pumping around everywhere. Uber, people doing it, the gig economy, all that stuff, like business registrations are popping off. So I think that's masking some data for sure, like unemployment data or people moving to, because they're not technically job searching, they're starting side stuff. But look, it's so many reasons, right? Number one is skill doesn't happen overnight. Even if you're going to study through it, there's studying, there's work experience and going. So there's that overseas migration that needs to play. And this is something as well, like controversial. People keep talking across Australia to say, hey, stop the migration. It's too crazy. It's too high. We've got a crisis. But you know, if you grab the migration data and you grab the last 2 crazy years, don't get me wrong, they've been high. But if you cut, say, half the data off that chart and you just move it to the 2 years we hardly had any migration in 2020 and 2021.
Balanced out.
It balances out a fair bit. It is still high, but nowhere near the trends. And this is what we call like selective data. So media is doing this pretty heavily.
No.
You know, they're selecting. Oh,
they wouldn't do that, man.
No, they're angels, right? Like they do that. They wouldn't let us astray. But there's selective data. It's just like when people go Frydenberg, right? I'm not into the politics or anything, but let's just say people go to Josh Frydenberg and go, you put our country into a bajillion, squillion dollars of debt. How dare you comment about this? The bloke was there during a pandemic. You don't think the whole world printed money and went into debt to save the country? Like everyone pumped it. So where I'm going with that is like the migration isn't a major issue. If you flatten it out across multiple things, it's needed, because not at those levels all the time, because it needs to be balanced, but it's needed from a skilled labor perspective, because we need certain labor coming in to do that. Now, I don't know, I haven't gotten down to the depths of the detail if everyone coming in is as skilled as we need them to be. That's a different topic, but labor costs for sure require skilled labor. They require long-term visionary from leadership that creates industry in Australia, not just everything driven off, you know, certain economies, actually creates investment into, you know, the workforce, the labor force, skilled labor that's needed. They'll help with those things, but that's picked up like crazy. If you look at the 2019 versus 2024, the Australian Labor Cost Index, that index was sitting at about 94, 95 in 2019, it's sitting at 113 now in terms of points. So it's a clear rise on that side. But look, rising costs and labor shortages is one issue, although the costs have improved. Then you got the normal stuff like planning developments, red tape and stuff. Yeah.
So materials, you think costs of materials are coming back a bit?
They've all slowed down, like in terms of they're not as crazy rampant as they were sort of around that COVID period. So they're not falling, as in like declining costs heavily. Some have, but most of them, in terms of the cost for construction, are just rising at a way slower pace, right? And then, of course, alongside the construction, you've got the actual planning, you've got the building processes, the lack of land supply being released. But look, these are just some of the reasons, right? So in this report, we cover off 25 areas, the methodology, how this undersupply is going to impact property and which market specifically. And lastly, we also talk about the reasons that got us here. It's not the reasons everyone thinks. There are clear reasons that, like I mentioned, hold periods. That's one that not many people talk about. That's a big reason. Costs of stamp duty, that's a big reason. But the game here is established supply. Like once that changes, it is rising. But once that changes across the board, not just the Sydney, Melbourne and surrounds, then you've got a thing.
What's going to be the trigger point to that changing? Because I think over the last couple of years, the trigger point for a lot of people to sell a property and cop the hit of the transaction costs is just purely affordability. They bought a property when it was 2%. They can't afford it at 6%, so they sell. And I don't think we're going to see the government take a pay cut and abolish stamp duty and capital gains tax. So what would be a realistic trigger point for them to increase the established supply?
Yeah, I'll look at established supply increasing in 3 ways. So one is the natural, second is the forced, and then the third is like, just over time, right? And so the first one, natural meaning it's like a bit of overtime, but it's separate. And I'll tell you why I say that. Natural would be just price continuing growth and people cash out, right? Eventually something gets so good that you want to cash out, right? Whether that's a outer ring market, which we've seen the trend begin. Outer ring markets over the last few years grew faster than inner and middle ring markets. And during those last few years, that price gap is getting very tight. So for example, we've seen some affordable areas in Perth start to slow down their heat, but then inner markets of Perth are rising faster. That didn't happen the last 2 years. It's been happening now. And so that particular part can make listings pop up in certain areas when people are upsizing, people are actually cashing out, people are moving same home size, but maybe different rings. That's one aspect. That's the natural progression. Then there's the forced way. This is like major policy changes. Major policy changes being, let's just see stamp duty remove, right? If you remove stamp duty and play around with CGT for the benefit of the people, as in the benefit of the housing owners, you're going to start to see massive mobility. Because if I now go, I can sell my home in Melbourne and rebuy in Melbourne, and I don't have to pay stamp duty because Melbourne has the highest stamp duty. Victoria has the highest stamp duty in the country. That's big savings. It's like 60 grand on $1 million budget.
I'd probably become a real estate agent, honestly. The amount of properties that would be changing hands.
Yeah, the changing hands part would be massive. So that'd be big, right? Obviously, there's demand too, because when you change hands, you're buying something, right? Yep. You're not just selling. You're going to sell and then buy. So demand would be up there too. But I mean, the main thing is it would free up a lot of established stock that might have been sitting there. And then the last thing, which is the natural over time, which is the first one was natural as in the big cash outs. But another one I'd say is that people's confidence in the building, because right now sentiment and confidence in the building industry is quite weak. As that confidence returns, people actually also start considering more new builds, more commitment to that, more progression with the build itself, seeing that as a strategy. Skilled labor starts reducing the costs, and if that starts improving the labor shortages, then we start seeing, okay, it's not as expensive, the gap's not as wide, I feel confident in it. These things all shape the supply. So sentiment over time, the natural progression of people moving between rings and cashing out, and then major policy shifts. That's going to be the big drivers of established supply. That's my thoughts.
Can only hope and pray, mate.
Mate, absolutely. I think. Look, there's now a divergence that's clear, though. I think that's the big thing. There are markets to be seeing some strong capital growth, largely due to undersupply, and there are markets that aren't as undersupplied, so it's buyers markets and opportunities to get some deals. But mate, this report covers it all. So if you're looking at it from a perspective of, I want to know why there's an undersupply, and I don't want to be Facebook comment knowledge. I want to be the real stuff of what's happening in the data behind it. And then I want to move into the actual markets and which markets are undersupplied. And quick one, Jack, there's a bit of a bonus here. So firstly, I said there was 25 markets, but in this report, we actually expand upon another list of regions. There were 33 regions in this report. 25 we went deep on, but 33 we highlight. And the reason why is this SSS, Supply Shortage Score, has a score of 5. And a large portion of them, about 8 of them, beyond the 25, also scored 4.3. And so that last few was all scoring 4.3. We just couldn't fit 33 into the report, so we kept it at 25. But we give everyone a list view of 33 markets. So go check it out, investorkit.com.au, and all for free. A housing supply crunch 24-25 FY gives you some insights of where supply conditions are super tight across Australia. So yeah, Jack, that's it from us and everyone tuning in. If you've taken the time, Christmas Eve to listen to the property nerds, you're a true property nerd. We appreciate you. Like we love that you're here going, I could be opening presents right now, but I'm tuning into Jackie and Arj on the data to see what's happening. So we thank you for all your support. 2025 has been an epic year. This podcast has now crossed over 700,000 downloads across all platforms. Property Nerds InvestorKit podcast put together. Super grateful for everyone's support. One of the fastest growing podcasts in Australia from the property data perspective. And we've got a lot more coming in 2025. It's going to get super exciting and many more topics and many more layers of data too. We've got lots of cool data tools building out that we're going to be chucking in and lots more happening on the finance front as well. So we're going to keep that flavor going. Thank you everyone for tuning in. Wishing you all a Merry Christmas from both Jack and I. And catch you in the new year.
Game over.